Early in spring this year, KRE stock, the regional bank ETF, fell pretty sharply on some bank runs. We have bank closures, biggest in the U.S. history. Things have bottomed out a little bit. Now the 10-year Treasury yield is starting to ease back. Profitability is looking a little more certain for some of these stocks. I wanted to break down KRE stock. I'm going to look at the top 5 holdings just to show you that those individual holdings themselves are a strong buy. If the 10-year Treasury yield does hold off and doesn't peak back up above the 5% level, KRE stock would accelerate pretty nicely. This is a buy on the dip opportunity. Let me show you what you could get in the individual stocks. I'm going to break those down and show you why KRE stock, the regional bank ETF, would be an opportunity to take advantage of these undervalued regional bank stocks. Let's jump in. If you are just joining me for the first time, make sure to hit that like and follow button. Channel's growing quite nicely. I am an economist, first and foremost. I break down the economy, then I show you how that applies and will affect the stock market, the individual sectors, and in this case, we're looking at KRE stock, regional bank ETF. This is the 4-hour chart. The 4-hour chart, of course, this is fairly similar for a lot of the other stocks. The 10-year yield, it seemed to be bit of an anomaly. The yield on Treasury notes was pushing much higher all through October. Stock market sold off. Yields have done a U-turn, are now coming back downward, and across the board, stocks have rallied. We're getting close to some pretty big numbers. Some stocks have cleared all-time highs. Some have yet to get to that point. This is KRE stock, and of course, you can see we moved from about 38 to we're pushing 50. I think I saw 49 and a quarter print earlier today. That's a pretty decent move. Putting it into perspective, you can see the damage that happened early 2023 with the bank closure, Silicon Valley Bank, SVB. And then, of course, we had a whole bunch of other problems. The FDIC had to step in, rescue a few institutions. That was the damage for the regional banks. Now, here's the thing with regional banks. They don't have all of the tools that your big financial banks, the member banks, by member, I mean members, the ones who actually own, if you will, the Federal Reserve. There's 14 member banks that if you're just a regional bank or a small bank, you must go through those bigger banks to access what you need in the Federal Reserve. Those bigger member banks have all sorts of tools at their disposal to mitigate interest rate moves. So when you see interest rates moving upward, this really pressures stocks. And you can see what happened all through summer, how KRE stock here did bottom out in November. We saw the 4-hour bar chart. You can see that clearly. We're pushing levels that a technician would sit there and say, it's going to go to the moon. Okay. I can show you other things fundamentally that would individually push a lot of these stocks up higher. First, let's take a look at the 10-year Treasury yield. I don't know that we're necessarily going to see 5%, but then again, I don't know that we're going to see 3.5%. A lot of this has to do with what's going to happen with unemployment. The thing is with unemployment, the Federal Reserve right now today does not care about unemployment. They care about price pressures. They will sacrifice employment in order to get price pressures where they want them. I do not believe that the Federal Reserve magically hit the number they need to hit that will push inflation down to that target level of 2%. I believe interest rates are going to remain higher for longer, and the stock market's going to get a little upset. The bond yields moving lower like they are, I don't necessarily know that October was actually true. That, yes, I do see bond yields remaining high, but the 10-year pushed above 5, the 20 and the 30 were well above 5, like 5.25, somewhere in that range. So those moves in October, we never really did find out what did that, and it seems like some big players just got out, pushed price down, yield went up. Well, now people are taking advantage of that because treasury yields are sitting at a decent yield. They have lower risk than stocks themselves. Moving into an unknown uncertainty with the economy, jumping in on the 10-year treasury yield would be a solid investment. You're locking in 4.25. You're locking in at this point 4.19 for the 10-year. How does this affect KRE stock? All right. So banks get a spread. You're going to deposit money into your savings account and they pay you interest rates. They loan money out. The 10-year is sort of the benchmark. So it depends on how far out you borrow your money, but they'll collect that spread in between. But they also have other costs involved. So when the 10-year did move higher, a lot of these regional banks were pressured significantly because of the costs and the inability for these regional banks to mitigate those costs. So we are seeing the KRE stock and all the individual stocks moving higher. But let's take a look at this. Truist Financial, TFC symbol, M&T Bank, MTB, First Horizon, FHN, Huntington Bankshares, HBAN stock, Zions Bancorp, ZION stock. These were the 5 biggest holdings inside KRE stock, the ETF for regional banks. I have the price. I have the next 4 quarters earnings per share projections. Real simple. Take the $3.46, divide that over top of 34.15 for TFC, you get a yield of 10.13%. Should TFC, Truist Financial, achieve their earnings per share? These stocks were beaten down so low, they're potentially going to yield 10%. Go on down, M&T, First Horizon, Huntington Bankshares, Zions, 11.04%, 9.79%, 10.41%, 10.61%. There are some assumptions. Number one, 10-year yield doesn't start skyrocketing higher, which would cut into a lot of the yield potential that from earnings that these companies could produce. I don't see the 10-year surging, say, well above 5% to 5.25%, 5.5%. But I do see the 10-year yield sort of moderating in a price and staying there because the Federal Reserve has told us that. A lot of people don't. At this point, they're saying, no, we're cutting as soon as possible. We don't know that yet. I think they may have to raise rates if we see inflation numbers not hit that 2% level. But when you break down these yields, some of these banks are some of the best yielding stocks you're going to get your hands on. Given that, looking at these, this is an investment, KRE stock got beaten down pretty heavily, the individual stocks themselves, because of a lot of the fears that were going on within the financial sector because of SVB and the FDIC having to stepping in and saving a few banks. Now you should be looking at these stocks. If the 10-year stays at a level rate, these banks are going to be able to mitigate any kind of cost structures, because if the interest rates remain about the same, they're going to be able to loan money out while at the same time have to pay savings and take that spread. And if the 10-year can remain pretty flatline, these banks are going to do pretty well. And as a shareholder, potential shareholder of these individual stocks, you'd do pretty well. I would expect that KRE stock, the regional bank ETF, would move much higher. It's already jumped pretty significantly in the past couple of weeks simply because of everything that happened with the 10-year. So there's a lot of variability here. What happens with unemployment? Something you got to keep in mind. What will happen with the 10-year? How will these banks perform in that kind of environment? And that's one of the things with value investing in times like this. You really need to kind of look at all the variables and ask the question, is the juice worth the squeeze? I see the 10-year remaining higher for longer in kind of staying flatline. Banks will do okay in that scenario. They'll create that spread, paying out in their interest savings accounts, but loaning out at a much higher rate, taking in that spread. That's how banks make their money, these regional banks especially. Given that, should these regional banks also have protected themselves with any kind of assets that they're sitting on that they are worried about, such as mortgages on towers in downtown areas, which are now sitting nearly vacant? A lot of these banks are starting to clean up their books as much as possible, so that risk is deteriorating there, but it's not down to zero. So these are, again, more things that you need to kind of take in consideration when you're looking at KRE stock. For me, I look at it and I say valuation alone on these individual stocks, should they come even close to these numbers, KRE stock, the regional bank ETF, goes higher. If you're looking for this kind of content where I break down the stock market analysis in the individual sectors, make sure to hit that like and follow button. See you in the next video.